Can infinite banking help me buy a car? Hi, I'm Steve MacLellan, the financial engineer, proud member of the IBCanada Group, where we help you grow, control, and keep your hard-earned money. When the presentation is all said and done, you'll learn about infinite banking in Canada, and you will know the best way to buy your next vehicle. And make sure you stick around to the end, because we're going to talk about why the infinite banking concept is not more popular here in Canada. The infinite banking concept, or IBC, is the process by which one becomes their own banker, as taught by the late Nelson Nash. Instead of borrowing from the banks to buy your next vehicles, to put down payments for investments, including real estate, your children's education, business expenses, including those nasty taxes, landscaping and renos, anything and everything you currently finance, emergencies or vacations, instead of using the banks and borrowing from the banks, you have the ability to borrow from yourself and still have that capital grow. Here in Canada, there are 3 ways to have a vehicle that require money, and that's leasing, financing, and buying. 12 years ago, this is a picture with our newborn and our new truck. Now that little guy in there is much bigger, doing strong, big things, where the truck is rusted out. So if I could have done it all again, I probably would have bought slightly used, and I would have done it differently than the way I did. And I'll show you exactly what I did. Generally, the only one that really benefits from the lease is the car dealership. When you're taking that new vehicle off the lot, what happens to the value of that vehicle? It goes down, right? The car dealership capturing that depreciation cost and then selling it down the road. It may make sense if you are a business owner and you can have write-offs. This leaves us with the 2 other ways of buying a vehicle, either financing or buying right out. Let's use the example of what most Canadians do. They borrow to get their vehicle, either from the dealership or from the banks. And we'll use $40,000 because that's what I bought my truck for. Most people will go to the bank, get approved for a loan, $40,000, and then they pay that $40,000 back plus interest. Is that the only vehicle you'll ever get? If you're like most Canadians, you'll get anywhere from 8 to 10 vehicles. And if you think about it, the bank was nice enough to give you the $40,000 for the first vehicle. Where did they get the money for the second, third, 8th, 10th vehicle? They got it from you. You gave them the $40,000 back plus interest. This is a rinse and repeat cycle for the banks, making money hand over fist. But what about the saver? Because that's what I was. When I did the calculation for my first vehicle, what I did not take into account was that $40,000 left me never to make me any more money again. I lost out on the dividends and the interest that $40,000 could have made for me. I gave the $40,000 to the dealership. They gave me a truck, and that $40,000 left me forever. And what really woke me up was when another trusted financial advisor gave this presentation and showed me where the saver and debtor end up. Will Moran showed me this. They end up at the exact same spot. This is where we try to help you become the saver at first, where you put your hard-earned money into a properly designed whole life policy that pays dividends, and then that gives you the ability to borrow against yourself. We generally recommend that you pay yourself back just like you would with a car loan. And as you can see, over the long haul, there's a huge difference between the banker from the debtor and the saver. So the question comes up, if this is the best way to buy a vehicle, why aren't more people doing it? Why isn't the infinite banking concept more popular here in Canada? The majority of Canadians still get their financial guidance from the banks. And where do you think the banks make most of their profits from? They get it from credit cards, lines of credit, mortgages, debt. The banks want you to be a consumer. I find it crazy that the majority of Canadians still get financial guidance and advice from an institution that wants you to go in debt. They will never sell an insurance product to you that requires underwriting unless you got over $5 million in the bank, and they call this private banking. But what about the traditional financial advisor? Now, there are a lot of great people in the financial industry. From experience, the majority either lack knowledge or integrity, where I would say the majority is knowledge. The financial industry is also very male-dominated and ego-driven. And instead of collaborating, we often compete against one another. There are people that think the infinite banking concept is the end all be all. And then there's the other side that thinks whatever they do is right. And instead of helping one another, they end up attacking one another. And for this reason, a lot of financial experts won't share their expertise in a public forum. I believe the infinite banking concept is really only a portion of your diversified portfolio. I'm a huge fan of Warren Buffett. His advice is do not put all your eggs in one basket. When you're talking to the majority of financial advisors out there, they tell you a diversified portfolio consists of several mutual funds and stocks. That's not being diversified. That is just being invested in the stock market. A truly diversified portfolio consists of you, your business, or your employment, real estate, living benefits, especially for business owners to make sure that they have money coming in if something were ever happen to them. Not all whole lives are created equal. They need to be designed properly if you are going to use the infinite banking concept, or if you want another traditional whole life that may benefit you during death, but the majority want to use this while they're living. So the whole life policy has to be properly designed. And of course, there are alternatives out there such as Bitcoin, other cryptocurrencies, other currencies, precious metals, angel investments, and private equities. Now, based out of this diversified portfolio, I have to ask you this. Where do you think you're going to make most of your money? I hope you realize it's from you. It's from your business, from your career. And when you go from good to great, your net worth is only going to increase. A properly designed whole life policy is the only thing that's vested that continues to go up no matter what happens to the economy or the market. As you can see, the growth is slow at first. This is why a lot of people question it, especially in today's society where we need instant gratification and instant growth. But as you can see, over the long haul, it gets quite exciting. The infinite banking concept is a thing that you do. It's not a product, but it's a process based on a properly designed whole life policy that you don't see immediate returns on, but over the long haul, you do. And that's another reason why it's not as popular as it should. I believe a properly designed whole life policy is a great way for your money to work hard for you with little to no risk involved whatsoever. The majority advice out there is to take your hard-earned money and put it into the stock market. And yes, investments generally go up. But I have to ask you this. When do you think most people buy and when do you think most people sell? Including the biased Canadian financial advisor. Unfortunately, it is the opposite. A properly designed whole life policy allows you to get that destination just like the investments do and beyond. Reach out to an independent expert at IBCanadaGroup.ca where we will help you and answer any questions that you may have.